Alright, so if the video is sort of scaled in a weird way, it's because I'm screen recording on my MacBook, which has a weird dimension. But today I just want to go over how you can figure out where the market is going to go on a given day. And something that can help you is gaps. Like, for instance, the past few days, as you can see here and here, we've had gaps. And then we've done it before yesterday. So then today we also had a gap. So it'd be like, okay, we have a gap. There's a high chance that we go up, back and fill it. All those unfilled orders. Now if you don't know what supply is, basically, um, for instance here, it just fell off, and a whole bunch of sell orders didn't get filled. So they want to push it back up, so they can fill those orders up again. And yeah, so that's basically what it is. And demand is just sort of the same. It's unfilled orders. Um, and they want to bring it back down, and then they want to get those buy orders. And basically, in a sense, but if you want to search up the definition, it's online. For instance, today, an easy way to figure out where we were gonna go is on 30-minute, which is sort of like the highest time frame that I go sometimes. You want to go to the Hikinashi candles, as you can see right here. Data just looks so much cleaner, so much better. But obviously, it's a lagging indicator basically. So you don't want to use it just by itself. But for marking out demand zones on 30-minute and also supply zones, it's perfect. For instance, what I do is go to the previous candle before the big shift move up. A lot of people would do just this part right here, just for. But I used to do that, but then I just price is always so different, so it's might as well just do the whole candle, and if it breaks above it, get out of your position. So this right here would be the highest one right here. It will be our supply. This right here would be our demand. But usually these I just leave them dark gray. If it goes up there, it goes up there. I leave them dark gray just in case I mark out more positions down below. So then we would go to 15-minute chart. So obviously before the market opened today, you can't go back. But so today all I seen was we had this right here. Boom. And what else did we have? Try to mark out all the possible ones just in case. Because we already have this one, this one, this one. Cool. Now on the 5-minute chart, I would just scale down. And you could see this is where you would want to take a trade. But let's switch over to regular candles now. Alright, cool. So in the morning, what do we see? We see this right here on lower time frame. Change your direction, and then we go back down. In the 1-minute chart, it's also like a low demand zone. But we go down and test the 30-minute demand zone. What do? We see it go all the way up to here and test this demand zone up here, where the space, the imbalance was here. There's the imbalance. A lot of people didn't fill in their sell orders, like all the market movers, so they wouldn't move it back up, and then they wouldn't push it back down. But on the 1-minute, if you would have taken the trade, it would have been pretty perfect. What you want it to do is go up and then build a floor, because obviously the market moves like higher highs and higher lows. So you never want to get in right off the bat as soon as it moves up. Or you can, but there's a lot of risk. It could just um, just come plummet down. The stop loss is crazy. Because imagine you get in right here, and then you wait to get out all the way down here. For instance, instead you could have just waited here for it to reverse, and then into a demand zone, which should have been this one right here on the 1-minute chart. And then as you can see, we went all the way up to here. Could have targeted this liquidity right here. and then we could have targeted obviously this imbalance. There's an imbalance here on the 1 minute. I don't really do fair value gaps, I'm gonna be honest. I do imbalances. It's probably the same thing, but fair value gaps would have been like, okay, there's a fair value gap right here, or here, or here, so it's gonna go down, blah blah blah. I don't really trade that, I'm gonna be honest. Doesn't, but it does make sense to trade fair value gaps. But when you're trading, supply and demand levels are important. Stock market, people buy, people sell. Where do people want to buy? Where do people don't want to, like, where do they want to sell? It's basically every strategy is the same. It's just different words, made up terms, whatever, you know. But here, on the 5 minute chart, for instance, this market's still open. We got like 15 minutes left. Something else you can do is obviously the simple break of structures, change your directions. You can see here, went up, and guess what it does? Comes back to the demand zone here on the 5 minute, and then it takes off. Here, it goes up, it goes down, goes to the floor, boom, goes up, and tests some supply level here, maybe on the 1 minute chart. Yeah, this one right here. So it's like a head and shoulders sometimes, what I've noticed, where it's like, so you would have this, the left one here, and then you would see it kind of go down, but it never surpasses this one right here. I don't like to label it head and shoulders. That sounds corny, but it sometimes works, because right here, if it goes, where is on the 5 minute chart? Alright, cool. Because let's say it goes up. Actually, it was on the 1 minute chart. I'm tripping. So right here, it goes. Wait, is it here? Am I tripping balls? Okay, here. So if it surpasses this supply zone from this left shoulder here, buyers would be in control and sellers don't want that. So they just want to start selling automatically right away as soon as it starts touching some sort of candle where it closed. For instance, it would be here, this floor. It's just basically what I call it, you know, the price floor, you know, some obviously economics, but floor, boom, goes down. You can target these levels, boom, boom, or anything over here. But yeah, it's on the 1 minute chart. It's basically, you know, you don't want to go past this left shoulder here. And then I think that's what happened on the 5 minute chart too. Right here, as you can see, it goes down, it goes up, boom, boom, but guess where it stops? This left shoulder right here, and then it goes down. It's not always going to be perfect. Price moves weird. Market's never going to look the same way every single time. You just have to know, oh, this last time it went up and then it came down and then went high. So why would sellers want it to go past this one right here? You know, it's just, you know. And then we have this break of structure, retracement, boom, break of structure, retracement. But here is a different, kind of weird. So where you want to look at higher time frame, because you can also see this was a change of structure, break of structure, boom, retracement, and now it's going higher. So you have to keep in mind all these higher time frames, how they move. But if you only trade the 1 minute chart, you can just sort of see. I don't think, if you trade 1 minute chart, I don't think like 30-minute chart matters. Because if you solely just trade 1 minute chart, you can see, oh, okay, we came down, break of structure, retracement, boom, break of structure, retracement, boom, and then right here it got held on by the floor, and then it shot up. You know, they always want to like liquidity sweep people. They want to make money. As you can see right here, this was the floor that's been holding on the 1 minute chart. Every time it's just been bouncing and bouncing. Then we got the break of structure, and then we came down, retrace on this doji candle right here, or you can use the Bollinger Band. Sometimes support and resistance works well, and then it shoots back up, targeting these highs right here. And as you can see on the 5 minute, it's just basically change the structure right here, retracement, and then it's shooting higher. And then again, if it gets past here, then buyers would get into control, and we could just see what's happening right here. Something that also helps would be MACD. I already have it. I'm tripping, but add it. I don't really use this one, but you can see MACD how it's still continuing to go higher in the 5-minute chart. And then you can see how the histogram is kind of shrinking a little bit, which means buyers are sort of losing it. So you want to go to a lower time frame, see what's happening. You can see right here, okay, sellers on the 1-minute chart are kind of getting into control here, but mind you, it is a breakup structure, maybe a little bit of retracement before we head up. 15 minute you can still see it's still going strong. Breakup structure, retracement, could go higher. I speculate that it goes higher. You can see right here, yesterday we sort of just went up once and then sold off, and as you can see, we just fell down back again. So maybe that would be the same thing. Maybe it comes into the sell-off zone again. We could look for it here. And mind you, Hikinashi is perfect to find levels on the 5-minute and 15-minute where we could retrace. For instance, here you see this big candle right here. Let's go for it. And switch back. So you see right here, it's rejected here once, and then twice maybe now. But we can just wait and see how it's going. It looks pretty weak, not gonna lie. So maybe it just comes down. Maybe MACD retraces. You don't have to go all the way up to the 1-hour chart, but sometimes it does help. But you can see here it's been going down. MACD, the histogram looks like it's shrinking for sellers. So maybe it shoots up a little bit, and then we test where is it? We test this supply zone right here next. It is a possibility, but it's looking like maybe it just bounces sideways. So you can see here on the 5-minute chart, this kind of fell off pretty good. Breakup structure, retracement, maybe we head to the upside here. You can find the floor by just finding the lowest candle that it's closed at, and no, this is surpassing that. Maybe it wicks out. If we get a closure on that on the 5-minute, then it could be a possibility we go down. For instance, here, this one right here was a terrible breakup structure. Like right off the bat, you could just see we sort of just broke through it. Didn't care for it. For instance, this one up here, it just wicked out here. Just we had a closure up there, then a retrace up into the demand zone. Boom. The wicks are important. They're your best friends. Right here, wick, doji candle too. So it would have been great entry right here. As you can see, MACD wants to cross over to red. As you can see, change in color. And if it keeps expanding like this, as you can see, it'd be a good possibility that it is still going down. And if we go to 1-minute, it'll be even better. But see, it was probably just the end of the day sell off, just dumping. Market movers trying to get people out and whatnot. Go over to Mez. As far as futures are going, this is probably just a retracement based off of what futures are doing. Futures got to break the structure as well, and then continue just retrace and then selling off again. Because I mean, yes, if we didn't have these large red candles here, mine are white, but they're red candles, then maybe it could have had a possibility of it still going higher. But Yeah, nah, this looking like it's about to be a dump. Maybe 15-minute chart, possibility back to this level. But again, Bollinger Bands come in clutch. Not all the time. It's not always gonna be perfect. It can like go a little bit above and then reject, and then like this, it can go a little bit below and then reject, and then But that's basically how you find some good levels for support and demand. Um, you know, but keep in mind breakup structure as well. If it's terrible, if you get a closure above breakup structure, then that's a good indication it could reverse back into the floor demand zone and go back up or down. But yeah. And then now, as you can see here, at the end of the day, they decided, oh, we did get that breakup structure from here, retracement, boom, to saw the supply candle at the 5-minute chart, and on the 15-minute, it was just a simple breakup structure, retracement, and then back into this huge supply zone, and they filled it, and then they decided to drop it. And then, if you want to know, it's that the market moved from supply to demand zone, or just call it a liquidity zone, since it could be both at the same time, in a way. But if you go under it, blah blah blah, it's become supply. But as you can see here, supply zone to demand zone, and in the 15-minute, it was just demand, supply to demand, and the other in the earlier day, it was just from one demand zone to the other supply zone, and then we got that breakup structure here, and then we just came into the supply zone on the 5-minute chart. On the 1-minute chart, you obviously could have been a little early on it. You could have been like, oh, we just right here was the floor, and then we broke under. We closed multiple times, came back up to the supply zone, and you could have got back. You could have got in and taken it down. Just want to keep your trading simple. And what else you could do is, what I'd like to do as well is look at NASDAQ and VIX. You see VIX right here was starting to look like it was about to bounce. It was like, I use the Williams percentage to figure out if it's oversold or undersold. I don't really use it, or overbought, but see here, it came back down. It could have been looking for a reversal. And then on the 15 minutes or just NASDAQ on the 5 minutes, which I use as well, you can see, it hasn't touched the supply zone all day. So, it came back up, boom, boom, and then it comes back into the supply zone at the end of the day, and then that's when we sold off. So these, I use them together. Sometimes it's the 15-minute. If you go to 15-minute, you go to Hikanashi, you see that all of this was just a big sell-out zone. So, but you can go down to 3 minutes as well and look for a good entry, which would have been here, and you see your respects did it. So, yeah, you can use these together. Excuse me, I also burped. But, yeah, you could just see it was sort of choppy, boom, boom. But yeah, that's basically it.